Hey, everybody, welcome back for another episode of Proof Vision. We had Ryan, the CEO and founder of Vaults.fyi, on the episode today. Really interesting conversation. We covered a lot. Obviously the UX problem in crypto, we've talked about on this show multiple times with multiple different guests. And Ryan and his team are solving that problem for accessing yield, not only on maybe a distribution perspective on like how can you access these yields, but also on the data level. There's a lot of projects out there that are calculating APYs in many different ways. There's different aggregators that are calculating them in many different ways. And Ryan and his team, I really like their approach because they're building this from the ground up in terms of how do they actually calculate the APYs block by block. And so it was a great episode. I think, data on chain and the way that data is displayed is a huge barrier to entry for a lot of institutions, and a lot of normal folks as we want to onboard them into the space. We've got to improve that user experience. And I think Vaults is a great way to accomplish that, and they're headed in the right direction. So it's a great episode. Obviously, if you enjoy it, please like and subscribe, and we'll see you on the next episode of Proof Vision. Thanks. Take care. All right. Welcome, everybody, back to another episode of Proof of Vision. It is a sunny Friday where I'm at. Looks like rate cuts are on the horizon, so it's a good time to be talking to the founder of Vaults.fyi. We got Ryan. How you doing, sir?
Doing great. Also sunny Friday by me.
Good. See, it's rare these days that I'm getting a sunny Friday. Actually, it's been raining for the last week over here in Ohio, so thank you for that. But yeah, Ryan, thanks for coming on. Obviously what you guys are building is really, really interesting on a couple levels, which I'll get into in a minute. But before we touch on Vaults, let's talk about your background. What were you doing before you got into crypto? What ultimately led you into the rabbit hole? That's always something really interesting I like to hear from everybody we bring on here.
Yeah, I'll give you the slightly longer version since we've got some time today. But like a lot of people in college, I studied finance, planned to go into investment banking, and had this internship where my boss was just this terrible person. And I, had talked to enough people that worked full time on Wall Street, and they're like, yeah, I mean, it's kind of, par for the course. And it sent me into this spiral of like, at that point in my life, I'd kind of thought about, I'd studied finance, I'd go work in investment banking, I'd go get an MBA, and then I'd go do something else. And I said, what if I just kind of like cut out those 4 years and just figured out what the something else was going to be? And so wound up spending my junior year of college just exploring a bunch of different things. I worked at a renewable energy company. I worked in like VR and AR research, and then eventually stumbled into the crypto rabbit hole just through some sort of podcast or something. That was probably like 2016, 2017 timeframe. Completely was obsessed with everything, from starting with the Bitcoin white paper, read Andreas Antonopoulos' book on mastering Bitcoin, and then eventually, started playing around with ICOs during that time frame. And then after college, moved out to San Francisco, worked very briefly at a venture capital firm as like an analyst focused on crypto. Realized pretty quickly they weren't going to actually make any investments in crypto, like more of a traditional kind of Series A fintech firm, and left, and then went and worked at a crypto startup that was called Trust Token. We launched one of the first USD-backed stablecoins back in March of 2018. We eventually sold that business off, which is a whole story in itself that I'll save for maybe another day. But yeah, so I've been in crypto ever since. I mean, it's professionally, it's kind of the only thing I've ever done full time.
Awesome. Yeah, it's funny. So I had I think the founder of Chronicle, Oracle's on, and it was the opposite of what you said. He had his first boss was like encouraging him to explore crypto, where you have the opposite effect, where it's like your first boss was awful, and that kind of like led you into this crypto rabbit hole ultimately, right? Which is it's just kind of funny, but yeah, many such cases.
Yeah, my favorite quote from that former boss of mine, and this is the moment I knew I like hated I hated working for this guy specifically, but that I was probably going to find something else to do was, I don't know, I was working on like a slide deck or something dumb, and I made a suggestion of like, oh, maybe we should say this instead of this. And he said to me, I don't pay you for your suggestions. I pay you to do what I tell you. And, I just kind of smiled and took it. And then I was like, no, I'm not going to be working here for much longer. So,
Yeah.
but yeah, it was what I needed, and now I'm here and very happy. So
That's funny. Yeah, life definitely works in mysterious ways. Yeah, similar experiences on my end. But yeah, ultimately, obviously, we landed in crypto, and once you get into crypto, you rarely leave. We all know that. So you talked about kind of trust token. Eventually, that got sold off and acquired. Let's talk about vaults then. So like, I always like to ask, like what did you see in the market in terms of the segment you're competing in, right? What did you see in the market that was lacking? Like, what was the edge that you saw that kind of inspired you to come out with vaults, and maybe explain, obviously, for the viewers, like, what is vaults?
yes. So Vaults.fyi is the best way to discover and access DeFi strategies, across today what is dozens of protocols and hundreds of individual pools and vaults and opportunities like that. And where we started was actually from, I would say, like a much more maybe niche or kind of nerdy use case where we were, as a company at the time, working with another DeFi protocol and trying to help them build this just really simple auto rebalancing tool between Compound and Aave, like something super, super vanilla. And just found that the different APIs we could access or data providers out there were giving APY data that we found to be fairly inaccurate, if not very inaccurate in a lot of cases. And so when we started Vaults, we actually were just curating the largest protocols and trying to give the most accurate APY representation as possible. And we do that by taking a look at the historical average APYs and calculating the share price change over time. So that's where we started. And so, like, in some respect, we started as just being a better data provider for these large vaults. And we had our initial homepage, which compared, I think, Yearn, Maker, Compound, Aave. And then since then, we've just kind of let the market continue to pull more and more stuff out of us.
This episode is brought to you by Pendle. Pendle is a leading protocol in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing assets in DeFi. This allows users to speculate on future yield or earn a fixed rate on their assets. Learn more at pendle.finance. Gotcha. Yeah, no, it makes sense, and it's spot on what you're saying about the APYs, right? And I think probably hopefully as we mature, right, everybody kind of hopefully adopts the same standards. That's what I'm hoping. But I mean, even at the protocol level, you'll go to a protocol, and the way that they're calculating the APY is not how you guys are calculating the APY, or it's not how their competitors are computing their APY, or some of them are 7-day trailing averages. And, so it's like all of this inconsistency, right? And it kind of creates, it contributes to, right, which is not the best UX right now for the user, right? And so I think what you guys are building, I'm a user, I love the product, by the way, but it just makes it a lot simpler, right? When you're trying to like assess these yield opportunities, and as you said, ever expanding, right? I mean, we're talking hundreds, eventually. I mean, even thousands if you really wanted to get into the nitty gritty, right? So it makes perfect sense, and so you saw this problem. You wanted to solve it. Vaults kind of spawned out of that, right? The next question I kind of have is like from an onboarding perspective. I mean, again, we mentioned the volume, the amount of market that's actually there to like eventually list on Vaults. How are you guys looking at like prioritizing that? Are you looking? I mean, obviously there's a level of probably Lindy out there that you're looking for certain projects that kind of qualify, but maybe take us through that a little bit. How are you guys kind of targeting these?
Yeah, so when we began, you're right. It was just, we wanted to cover the biggest protocols on the EVM. So all of the obvious names, Aave, Compound, Maker, eventually Morpho, Euler, things like that. At this point, we are mostly driven by customer and user requests. So one of the things I think a lot of protocol teams can get frustrated with us about is that they want us to add their protocol, And, we have a backlog today that is maybe another 50 protocols across the EVM that we would like to add. But because of the way that we integrate everything, where we build our own adapters, fetch our own data, we're not using any externally provided APIs for APY data from these different protocols. We have to build each of these ourselves. So each of them are kind of time consuming. I'd say at this point, we're adding on average about 1 to 2 protocols a week. So over the course of a year, we'll add about 50 to 100. I like to think that in a year's time, that means we'll have complete coverage, but obviously more things keep popping up, more edge cases, more networks, whatever it might be. So, today it's mostly customer and user request driven, but then there are times where still we see something really exciting in the market and we think that it's something like Cap, for example, Cap Money. It's on like the higher end of our backlog at the moment. It's not explicitly something that people have asked for, but it's a very exciting new protocol and we think, it's got a good APY. So, something we want to show to users.
Gotcha. Yeah, because that can be like the trickiest question, I guess, with something like this is, where to spend your resources and how to spend those resources. Obviously, you have a limited amount of those, no matter how large you are, you get to your limit. And so trying to figure out like where do you divert your attention obviously drives your product at the end of the day, right? Which drives users to the product. So yeah, I think it makes perfect sense. And you mentioned again, I'm glad you brought up Cap actually, because one thing I wanted to ask you, because I think you're the perfect person to talk about this a little bit. We're seeing kind of like this. I want to. Obviously, originally we had Maker. It was one of the original CDP model stables. You had algo stables back in the day, which will not be named for obvious reasons. You've got some of these vanilla-backed, like T-bill-backed stables, and now we're seeing like the next generation, right? We're seeing things like Cap, things like Athena, things like Neutral, et cetera. My question for you is, how do you think this kind of scales as institutions come in? Because even then, there's another layer of capital coming in, and another layer of stable coins. I mean, do you think that ultimately at the end of the day that we're going to have a few major stable coins that will dominate, or do you think it's going to be more of a diverse selection where there's more niches, I guess, within that market? I'm just curious to have your take on that.
It's a tricky question because I think even in some of these cases, using the term stablecoin is challenging. There was just a tweet that I responded to the other day of the CEO of Agora, which is also a more, I would say, more traditional kind of stablecoin type of product, saying that, with yield-bearing stablecoins versus stablecoins, there really needs to be some differentiation there because I don't really think that yield-bearing stablecoins is a great term because to me, these products feel more like a vault or a lending pool than they do a stablecoin, in that the underlying strategies, the composition of those looks more like a Morpho Vault, for example, that's got several different types of collateral and different yield strategies that are ultimately passing a yield back to the vault. One kind of stablecoin product that I think is really cool is Level, LVLUSD, and SLVLUSD. I don't really see it as a stablecoin though. It's just it's a yield-bearing product that happens to have an asset, it outputs that stays at $1, but I don't know that stablecoin is the right word there. So if I could maybe take the question in a slightly different direction, like, do I think there's going to be a lot more things that are pegged to $1 and pay out a yield to users in some way, shape, or form? Yes, absolutely. Like that is the ideal form factor. But I guess in my mind, and I think even like things like the Genius Bill would kind of reinforce this, stablecoin is at this point like a fairly specific term. And so if the thing is not backed by assets in a regulated bank account where users have one-to-one redeemability at any time, I don't know. I think there should be kind of a different word for some of those types of products.
Yeah, it's a good point actually, and I wonder if the Genius Act is actually going to push us like more like firmly in that direction too, right? Where you can't call your product a stable coin. Well, obviously, if you're outside of the U.S., you can do what you need to in that jurisdiction. But I wonder if it is going to kind of force that outcome, because you're absolutely right. Yield-bearing stablecoins is probably not the right not the right term. It's these are basically deposit receipt tokens. Yeah, anytime you deposit into a protocol, even like Athena, right? It's basically an IOU. You're giving your capital to Athena, which is basically incorporated as a hedge fund, and they are earning yield, on your behalf, and then passing that yield back to the shareholders, ultimately at the end of the day. So it is an interesting paradigm, I think,
Right.
to see how it
Right.
plays out.
Some of these things I would say, and I think Athena kind of started a bit of a trend that some of the other products you mentioned as well. I'm not as familiar with Neutral, but I think Neutral falls into this bucket. A few others where, like, the strategy that they're undertaking is in many cases kind of off chain or like a somewhat trusted strategy where it's not like Aave or Compound, where the entire process of interest generation happens on chain. In many cases, you're using off-chain OTC options, or you're using a pair trade on a centralized exchange, and you're then essentially passing that APY back to the LP share. But to me, the structure of things like that specifically feel very different than what I even consider like the DeFi that I grew up with, I guess, and these things are very popular. I think we at Vaults.fyi kind of had a stance of like maybe being a little slow to support them at first, but it very much is the direction that things are moving in. Like these almost like tokenized off-chain yield generation strategies that pass yield back to an on-chain LP share are very popular. And like, I think we're just going to see more and more of them.
Yeah, it is very interesting. I think we are going to see more and more. I mean, we just saw another one launch, I think yesterday, the day before, which is USD AI. I don't know if you saw that one or not, but it's backed by loans generated against I think GPUs. Um, and yeah, so you're definitely right. It's a trend. And I think in terms of like vaults, right? I want to talk a little bit about that again for a second. How did that impact your guys' like model or your job, right? Because I remember with Athena specifically, there's a way that Athena is calculating their APY, right? And then, I think it was Steven from DeFi Dojo, right, kind of highlighted this where it's not actually, at least in his mind, how he would calculate the APY, right? So there's like two, it can be a little deceiving. Not that they're doing anything malicious, but like, how does this complicate your guys' life, I guess is what I'm trying to say. Or does it, considering you guys are building these all from the ground anyway?
Yeah, we're actually fairly indifferent to whatever a protocol's UI shows. We're ultimately very confident in our calculations. And in the case of Athena specifically, I actually don't know why they do this, but they only update their APY on their site once per week. So if you look at the APY, I think maybe they update it every Thursday or something. So if you looked at it today, it would say, here's the 7-day average APY as of August 21st or whatever. But then they only update that once per week. I don't know. I'm guessing that that's kind of a nuance to them. But on our site, what you'll see if you look at the 7-day average APY is the rolling 7-day average APY as of every hour. So like in the case of Athena, I think maybe they should integrate something like our APYs even alongside their kind of once per week update. But, I think just kind of more broadly on this point, just not to pick on Athena, but what you'll see on most protocol websites is they'll actually just show you the current APY. So that's the APY reflective of the last block on Ethereum. So every 15 seconds it's updating basically. And that was another one of the big kind of insights we had initially, which is this is kind of like noise, right? It's not a very actionable metric to be able to make an investment decision off of. And so when we show APYs, the shortest time frame that we show is the 1-day average APY, but then we also show the 7-day average APY as the default, and the 30-day average APY is sort of more of indicative of what kind of long terms you as someone in this pool could expect to earn.
Yeah. I'm glad we kind of went down this path too, because I think it literally highlights right there, like kind of the value of something like vaults, right? Especially we talked about institutions coming on board, especially as institutions get involved. They need a reliable source of data, right? And I think that's where you guys are going to explode, in my opinion. But it's critical to adoption, right? And so, and you're absolutely right. It is noise, and some of these protocols even are, I mean, they're intentionally doing that, right? Because they don't want to spook their users, right? I mean, because let's face it, a lot of the on-chain users are very mercenary, right? So if they see the APY dipping down even for 8 hours, right, they're going to pull their capital and they're going to leave, or at least a fraction of people will do that. But it's important, obviously, for actions to be taken to have the right data, or have different intervals, I guess, to inform your decision making. So
Right. And another, like, a very specific example here, maybe just to paint the picture for listeners, is a few weeks ago, if I remember correctly, Justin Sun pulled like $400 million USDT out of Aave's V3 USDT pool on Ethereum. And for maybe like an hour, the APY spiked to 40% on that pool. But very quickly it corrected. And when you looked at our chart, which shows the 7-day average APY, which is if you had been in this pool during the 7-day period in which this happened, how would that have impacted your yield? It took it from like 4% to 4.4, 4.5%. So a change, but certainly nothing that looked like 40%. So that's where we think that these very, current metrics just are not super useful for, people's decisions of where to park their capital.
Yeah, no, agree 100% on that. 100%. That takes it. I mean, that really takes. We were talking about the DeFi that you grew up with. Like, there's yields back in DeFi summer that would last for like an hour, right? And then they would get diluted, or it's things like that. And I think that that's what wrecks the kind of the more casual participant, right? If you're not super informed, you need tools like Vaults where you can trust the data, and then you can kind of obviously make your decision, right? So yeah, I mean, the value proposition makes perfect sense, right? Just kind of highlighting all of this. But you guys kind of took it a step further too, right? Where it's not just tracking data. You can also take actions from Vaults, which is something that I personally love about it. So you can actually, you guys have curated, I think, a couple of Vaults or a couple of earn opportunities. I think you've abstracted some of the complexity away. Talk about that a little bit. What was the decision behind that, obviously, but then also, how are you guys curating, those opportunities on like the earn side for Vaults?
Yeah, so this is one of those things that in hindsight, we should have just done way earlier. Like it is one of those requests that we'd gotten for a while. And I think, personally, I had the feeling that, there must be somewhere else that does this already. Like there must already be some site you can go to and manage positions across Morpho and Euler and Aave and Lido all in the same place. And yeah, we pretty quickly realized that just wasn't really true. So back in January, we launched our first transactional product experience, app.vaults.fyi, where you can actually go in, connect a wallet, and entirely non-custodially manage your position across, today was, I think, about 20 different protocols. And your specific question was, how do we choose what to show on there versus not show on there? Oh, yeah, perfect. Exactly. Yeah. So the delta here. So right now, analytics wise, we have about 50 protocols. Transactionally, we have about 20, and we're working to get everything that we have on analytics also transactional. So we're closing that gap. I think what we've learned in the process actually is that there is a lot of nuance and edge cases in the transactions of these different protocols that takes even more work on top of just making them analytics. So a very clear example of that, I'll give you 2 or 3. It's more common now for protocols to have withdrawal queues. So for example, in something like Vita or something like Midas, in each of these protocols, when you go to redeem, you don't necessarily get filled right away. In some cases, you might have to wait 12 hours or I think even up to 2 days in some of these. So we've had to build notifications for users when they go to redeem about that. We've had to integrate the withdrawal queues of these different protocols. In the case of something like Midas, they have a redemption fee, which we didn't know about at first. Yep. And then we had to integrate that. And so there's all of these just kind of additional steps about making these protocols transactional that takes a bit of extra effort. But what I like to say is that as a result, it becomes our team's jobs to understand the nuances of each of these protocols as well as, or almost as well as, the protocol teams. So our team at this point has developed a really unique expertise in integrating all of these protocols, understanding all of the edge cases, and yeah, we try to be experts on everything that we integrate.
Gotcha. Makes sense. Makes sense. So then let's take something like the stablecoin, product here. So earn up to 24%. This is then a vault essentially that you guys have kind of curated yourselves in terms of yield opportunities, or like where is it coming from?
No, actually, but that is it's always great to have other people looking at your product live because you realize where things are maybe confusing. But so actually with that, if you click on earn, what that will do is actually take you to the Discover page, which lists out all of the other things that we integrate. So today, we actually don't curate any of our own vaults. Yes, site's loading a little bit slow. Chalk it up to the internet.
Yeah, for sure.
But yeah, if you click on stablecoins and earn, it'll take you actually to the Discover page and show you all of the different stablecoin related opportunities that we curate on site. And what that earn up to 24% means is that at this moment, the highest one is paying 24%, but not that we are curating a vault.
Gotcha. Okay. Makes perfect sense. Yeah, I think it is my internet that won't load it. No, it makes perfect sense. So yeah. Okay. So do you guys see maybe an opportunity in the future? I guess a question I always ask on this show is monetization. How are you guys monetizing this? Or if you're not monetizing it today, how do you plan on doing that? So how are you guys, thinking about that monetization aspect of the product?
Yes, good question. So today we're not monetizing this site at all. So we don't charge any fees. If you come here and you go to deposit into Aave or Lido, the transaction instructions that you're getting back are absolutely no different than if you went to Aave's UI, Aave's site directly. So there's no additional fees, there's no wrappers, there's no added smart contract risk. Where we're monetizing today actually is through our APIs. Mm-hmm. So everything that you see here, from the data to, from the APY data, the TPL data, holder data, and then actually the transactional integrations as well. So actually the call data to make deposits, withdrawals, claim rewards is all available through APIs. So today we work with customers ranging from like Gauntlet on the data side to Kraken on the more kind of thorough DeFi side, where they're integrating these APIs and we charge fees for those. But coming back to the app for a second, we do think there are a lot of opportunities to add additional capabilities in here that will be monetizable. So a few of the things we're working on at the moment, just to kind of tease a bit, are better cross-chain deposits and flows. Mm-hmm. So right now, like if you have USDC on Base and you want to deposit into something that takes USDT on mainnet, you'd have to swap first, either in our swap tab or somewhere else, and then move over to that new position. We want to make it so that you can just kind of one-click deposit into the USDT opportunity on Base, and the whole bridging and swap flow will just be handled seamlessly behind the scenes by us. And so there's lots of places where we see, where we can monetize in perhaps smaller ways.
Yeah, absolutely. And again, I mean, you mentioned some names that are already kind of using your APIs, which are big names, obviously. But I think you guys are like really, really well positioned there because, one of the things that has exploded, I think everybody sees the same problem. The UX is not good, or the UX, I mean, it's just too vast, right? There's too many opportunities. So there's all these vault providers now, right, that are building these vaults to abstract away the complexity and run their own strategies, right? And what do those vault providers need? They need accurate data. They need to make sure that they are modeling the correct data and modeling the correct returns and the risk profiles. And you can only do that if you're confident that you have the right APYs. I know this personally, working on like the app side of things for a DeFi protocol. Just like you said, once you start digging into some of the integrations, you realize quickly that there's a ton of things that maybe aren't broadcasted the best in the docs or whatever, right? And that eats into returns, or that adds complexity and risk. And so it's a really, really big value add, right? And that's definitely something I want to emphasize on this podcast because it's just so crucial for a lot of different players in the space. So I think you guys are well positioned, in that manner.
Thank you. Yeah, and actually, if you want to maybe even just since you are sharing your screen, if you click on let's just take Athena for example. Just a few down. Oh yeah, right there. Yeah, if you click on that, we can actually kind of go into some of the detail that we highlight on each of the pages. So of course we have APY data, TVL data up top. And then if you come down to the bottom, actually, you'll see that we've just started rolling out what we call our reputation scores. And so they're not exactly a risk score because we're not looking at the smart contracts, we're not reviewing the audit reports, but we're saying from generally verifiable on-chain data and using some third-party providers as well, can we say on a relative basis of everything we curate how safe we think this individual opportunity is? And so you can think of this as almost like a Lindy score, where we're measuring a few things. We're measuring the TVL over time in the protocol, in the specific pool or vault, the number of holders as sort of a proxy for how many people trust this thing, and then also looking at the underlying network using L2 Beats, stage 0, stage 1, stage 2 framework, and using individual asset scores from Credora when available. So for example, if you look through a bunch of different things, you'll see something like Lido, I think is the highest thing that we support, like the highest ranking today, because they have 500,000 holders. It's secured an insane amount of TVL over time. It's on ETH mainnet. Yep, exactly. And then, newer things. Yep, exactly. They're 10 out of 10, right? That's sort of the highest of the relative framework. And then from there, we can have all sorts of risk spectrums. And we also think this is kind of how we start getting closer to almost people thinking about risk adjusted yields.
Yep.
So again, this isn't exactly a risk score, but kind of a proxy for risk. And we think, it makes sense that Lido has a lower APY than other ETH staking opportunities because they are a 10 out of 10.
Gotcha. No, it makes perfect sense. I mean, and you're absolutely right. I think this is where the industry has to go. We need more of this. And I think you're seeing this pop up in different sectors, right? Like I think Blockworks came out with their, what was it called? The token transparency framework or whatever it was, for actual token flows, which I think is fantastic. And then something like this for yield though, is really, really useful. I think, especially as more traditional players again, start getting involved and not just institutions, but regular people. They can correlate something like this with a credit score in real life, or whatever it may be, right? And it's just little bells and whistles like this that really improve the UX. So again, I mean, hats off to you guys because I think you guys are crushing it in terms of, how do you make this information, this highly complex thing on the blockchain digestible and actionable? And that's what's really crucial is how can we kind of shrink the amount of time that people need to take to do their due diligence. So that way the velocity picks up in terms of, deploying capital.
Yeah. And again, I expect that any serious allocator will still do their own diligence on all of these things. But at the very least, this is a starting point for someone who says, okay, I just want to get a quick skim. What's really safe? What's very risky? Do the APYs compensate that correctly? And this is also very much a work in progress for us. So if anyone's listening and has feedback on it, we'd love to improve this score. It's very much a living organism.
Awesome. The one thing I wanted to ask too that we didn't really touch, you touched on it a little bit, but let's talk about the swap and bridge function real quick.
Right.
Go ahead.
Right now, this is. Oh, sorry, please.
No, go ahead. Can you just take us through it? I'm just wondering. Obviously, kind of like the earn products, right? That's not something you guys are curating. How about the swap function? Are you guys aggregating all of these bridges together and then giving the user the best path? Or how are you guys attacking this?
Yeah, so right now this is just Li-Fi's widget for swapping and bridging, and so that aggregates everything.
Yep.
As I kind of alluded to though, we're working on rebuilding swaps and rethinking a lot of this from the ground up, where I think even this idea of having kind of like a swap and bridge tab is not the optimal thing for our specific product experience, where people are coming here to earn yield on their assets. And so what we're envisioning more is that the swap and bridge should just be integrated into the deposit flow when you're going to deposit into a USDT opportunity on mainnet. If you don't have those opportunities, the swap and bridge should just happen with your existing idle assets as a part of that. So that's how we're thinking about that. Probably gonna. This was just sort of something we bolted on because swap and bridge makes sense.
Yeah, no, absolutely. And I agree. I mean, the more that we can get down to kind of like the one-click transaction kind of abstract away, what chain you're on, what the gas token is, et cetera. The more of that we can build, the absolutely the better. But no, man, this is good. This is great. It feels like you guys have obviously put in a lot of thought and effort in creating the product, and that's what I like to see is very, very sharp, curated products that make it simple for users to kind of navigate the landscape. So yeah, I mean, you're on the right track.
And actually, we've been thinking a lot more about product recently. And so in addition to our app.vaults.fyi, which is more of this prosumer kind of desktop heavy experience, we also just launched a mobile first mini app on WorldCoin in their World Wallet. And that actually takes the process of simplification a level further. So I just dropped the link in the chat if you want to even try to pull that up, maybe show some screen share of that. But the way that we've been thinking about that so far exactly is we want to remove all steps possible between the user and actually starting to earn. I think, if you scroll down a little bit more, there should be some screen grabs, but no.
My internet is giving us a run for our money again.
But yeah, so we've completely stripped down the experience. We even got, we're not even using Vaults.fyi as the naming for it. It's just called Earn. And there are just two big call to action, like deposit, claim rewards. And then in the case of World, there's a lot of token incentives on WLD and USDC on Morpho at the moment.
Yep.
And so, yeah, just making that as simple as possible for someone totally new to crypto, just to start earning on their capital.
Yeah, this is great. And this is this is an interesting vertical, I think, too. Is kind of the mobile experience. How do you guys get distribution there for your product? And then ultimately, obviously, DeFi benefits from that too, as a result of your product being integrated. Everybody talks about distribution. Distribution is king, absolutely. But if you can kind of get that distribution by getting your assets listed on Vaults, and then Vaults is integrated on all of these other things, that is like king-making distribution at the end of the day, if you can get broad enough.
That is exactly the position that we're shooting for, which is kind of between our first-party experiences, so whether that's the World app, whether that's our desktop app, but then also all of the API integrations that we're starting to have with other wallets, other interfaces, other people who are consuming the data, we think puts us in a good position where all of these protocols then want to work with us. They see us as a place that can help them tap into either our distribution or distribution from people who integrate our APIs. And then from the perspective of people who integrate our APIs, what we're saying is, hey, it is really tough to integrate dozens of protocols. And you can think of us as just like your expert team that's going to go out, integrate all of these things, and then all of that feeds back to you and your users. And someone who integrates our APIs can choose to show one Aave pool and one Morpho pool, or they can choose to show their users hundreds of opportunities to earn yield across tons of different assets. So that's how we kind of view it.
Yeah, absolutely. Absolutely. And that's mission critical, I think, as we want to get more institutional type capital into the system, right? Is these earned products that are coming out. I mean, I think MetaMask just came out with theirs recently. You've got the Telegram, mini apps that have come out. Obviously that's a huge distribution channel. You've got, Kraken and OKX, right? Everybody wants to get in on the earn action because they know what's coming around the corner, right? They know that all these fintechs basically are getting regulatory wins to be able to integrate this stuff. So you've got to strike while the iron is hot, right? And so it'll be really, really interesting to see how that plays out. But obviously something like Vaults is well positioned maybe to obviously take advantage of that. So it's definitely an interesting business model, Ryan. It's been awesome to chat. I think it's a good place to maybe start wrapping up. But is there anything we haven't covered, anything that's on the roadmap that you want to maybe speak to at all that's got you excited? Anything to close?
Yeah, I guess one thing that I've been excited by recently is just kind of this, I'd say within wallets today, I see kind of two diverging paths of where things are going. There are wallets that are thinking about how do we integrate and embed these very native experiences for our users? So the example I always give is pretty much every single wallet today has a swap tab, right? Swaps are deeply integrated, no wallet connect needed. And I think we're now starting to see a lot of wallets and products think about the earn experience as well. Like I mentioned, we're already powering Kraken's non-custodial wallet. We have a lot more coming with them, some other wallets, custodian type players as well, like thinking about how do you integrate all of this so that users can access DeFi from the interface that they already know and love and trust. And then the second bucket, I think, is wallets like Base and WorldCoin and a few others that are going down this mini app path, which I will admit that I was probably a bit more skeptical of at first because it felt like there was a lot more onus on the user to have to go out and discover these things and test out all of these different kind of interfaces. But we've just been blown away with the amount of users we've seen from the WorldCoin ecosystem. If you look at their page that I had shared with you, it says there that there's been 65,000 humans who've interacted. So those are people who have had their iris scanned and have gone through the orb process. But our own analytics show that, including people who haven't had their iris scanned, we've had over 100,000 people interact with our product experience there, which for crypto is just like a mind-blowing number of users to have had. So we're excited about trying to double down on more places that have mini apps as well. And yeah, just furthering your point, distribution is what matters. And so whether those are kind of our product experiences we have to build in these mini app flows or people integrating our APYs to have these very native flows, that's what we're particularly excited about. Outside of that, as I mentioned, we're excited about a lot more of this cross-chain interoperability and just making it feel like if you're using one of our products, it doesn't matter what chain you have assets on or what asset you have. We just want to help you get faster to the best deals that are out there.
Awesome, Ryan. It's been a great conversation. Really appreciate you coming on, giving us your insights. Taking us through Vaults. It's a great product, as I mentioned at the beginning. If you're listening to this, check the show notes. Obviously, we'll link you out to where you can find Vaults.fyi. And I definitely encourage you guys to use this thing. I'm using it daily, like I said earlier, because it just simplifies my my velocity. I talked about it earlier. It simplifies my velocity. I'm able to go deploy capital a lot quicker because I'm confident in the data that I'm seeing, right? It's the most important thing. So again, Ryan, appreciate it. Thanks everybody for tuning in, and we'll see you on the next episode of Proof of Vision.